Is a Circle, Ripple, and Kraken IPO incoming? Did the FDIC join the OCC in creating a more crypto friendly environment for the banking system in the US? Ripple's policy principles, let's talk about them. Is a global contingency plan for the world's richest families in full effect? And tokenization is democratization, according to Larry Fink? Let's roll that intro and dive on in. What's going on, family and friends? A little birdie on Wall Street confirms Circle's IPO plans are heating up, signaling what could be a major moment for FinTech and crypto companies going public in 2025. According to Fortune, the USDC stablecoin issuer has tapped JPMorgan and Citi to underwrite its very own IPO, with a potential listing before June. This marks a renewed push after Circle's 2021 SPAC attempt, which was derailed by regulatory hurdles and the broader crypto downturn. The article suggests Circle is targeting a $4 billion to $5 billion valuation, but this might not tell the full story. The $4 billion valuation likely reflects Circle's enterprise value in the secondary markets. That's Circle's current market cap of USDC plus total debts minus cash and cash equivalents. On Link2's platform, Circle is currently listed at an $8 billion valuation, showing the inherent fluctuations of private market pricing. Circle's move comes at an opportune time as the IPO market is regaining strength and the regulatory sentiment around crypto firms has notably improved. If successful, this could open the door for more fintech and blockchain-based firms to tap public markets, making 2025 a breakout year for crypto-related IPOs. Even Eric Trump of the First Family was interviewed on Fox just after the family announced its significant investment into Bitcoin mining operations, ahead of a potential U.S. regulatory adoption and institution of a U.S. strategic Bitcoin reserve.
Great. Congratulations on this. Tell us what you're trying to do and why a Bitcoin reserve is needed.
Yeah, you know, Maria, I never thought I'd fall into the world of crypto until every bank started canceling us for absolutely no reason whatsoever other than the fact that my father was in politics. We got canceled by absolutely everybody. They came after us viciously. And it wasn't until that time that I realized how important crypto was. It's something that's cheaper, faster, more transparent. You can't be canceled. It's what made me fall in love with Bitcoin. It's what made me fall in love with, you know, DeFi and CeFi and stable coins. And we put a lot of our effort into it. We're building a great company, World Liberty Financial. Everybody's talking about it, is doing phenomenally well. We just launched a stable coin. I think it's going to be one of the great companies out there. So I truly believe in it. And my epiphany was, again, cancel culture and what these financial institutions controlled by very few at the top were able to do to people that they didn't like, even families like ours that had a lot of zeros at the end of their balance sheet.
We have so much riding on new regulations, it's hard not to think that we're on the cusp of a Circle, Ripple, and Kraken IPO. But who knows? Only time will tell. Moving on, the recent updates from the Federal Deposit Insurance Corporation, FDIC, have streamlined the process for FDIC-supervised institutions to engage in crypto-related activities. Previously, banks were required to obtain prior approval before participating in such activities. The new guidelines remove these prerequisites, allowing banks to explore crypto services like custody and tokenized deposits, provided they manage associated risks appropriately. It's important to note that current policies in place do not extend FDIC insurance coverage to crypto products themselves, or will they after regs have been passed? FDIC insurance applies to traditional deposit products such as checking and savings accounts held at insured banks with a cap of $250,000. Currently, FDIC deposit insurance does not apply to financial products such as stocks, bonds, money market mutual funds, and other types of securities, commodities, or crypto assets. However, with the adoption of tokenization, we could be on the verge of witnessing a fundamental change to FDIC protection, as it could very much extend to cover, by the stroke of a pen, the insolvency or bankruptcy of any non-bank entity, including crypto custodians, exchanges, brokers, wallet providers, and neobanks. Here's a clip of Greg Kidd, the Wizard of Oz of FinTech, share his experience securing a bank charter license for his bank, Vast Bank, out of Tulsa, Oklahoma. Greg communicated that the application process took nearly a year, with plenty of red tape to adhere to. And despite Greg's decorated employment history, including a stint working at the Fed, the bank charter application process was no walk in the park for him.
Operation Choke Point cost me a couple of extra years and many, many millions of dollars to get my bank charter. What I had to go through to get through it, I feel very privileged and lucky and fortunate. I thank the team that I worked with. We had a lot of insiders, but even me, who'd been a Federal Reserve regulator before, worked for years at Promontory, had cash, promised to not do a lot of things. I'm lucky that we still even have running water and electricity at the bank because of all the things I had to promise I wouldn't do before they would let me buy a bank. When we tried to first do this at a state charter level and had to go through the FDIC, we had a year to close the deal after we reached the commercial terms. We did the pre-approval process. All it was a simple change of control. In the entire year period, the FDIC never even acknowledged that our application was complete. They just ran out the clock. And so Operation Choke Point is running out the clock on people. Just give us a little bit more time. On the last day of my commercial terms, after a year, I received a letter of 13 pages of single-space questions for things like, I can't say what was in the letter, but that was a year into the process, and the application had never even been acknowledged as filed. And so that type of Kafka-ish behavior was the hallmark of last administration. If anybody has any question as to whether Operation 2.0 was real, it was real.
To me, this identifies that this is very much a near impossible license to secure, preserved by an elite crowd that doesn't just let anyone have a seat at their poker table.
The banking club has been a very exclusive club. During the Biden administration, to my knowledge, really the only folks that got an opportunity to do this were myself and Jackie over with Lead Bank in Kansas City. It's a very, very small club of people who get through and get to be inside the tent. During the past administration, we went into a mode where we treated innovation in the sector of blockchain and these related technologies sort of like witchcraft. It was just come and talk to us and have a Khashoggi-like experience. Come on in. And nobody who ever went in to have one of those chats ever came out in one piece. And so it was a way of basically telling you, stay out.
Taking it a step further, Mr. Kidd recently launched his very own stablecoin called USBC, US Benchmark Coin. So I personally believe that Greg is on the fringe when it comes to all things innovation. And with the talks of the regulators becoming more favorable to crypto, my intuition tells me that Greg is definitely in the running for a first ever FDIC insured stablecoin. But as it currently stands, crypto products are not covered by FDIC insurance. Not yet. And for those of you who may not understand the importance of Greg Kidd securing his very own bank charter license, a bank charter license allows financial institutions to accept deposits from the public and engage in lending activities. It also permits the bank to operate as a trust department and perform other fiduciary services such as managing securities holdings. The Office of the Comptroller of Currency, the OCC, oversees the issuance of federal bank charter licenses and ensures that the corporate structures of these banks are safe and sound. Additionally, banks with charters must comply with capital reserve requirements set by the regulators, which could be by the Federal Reserve, the FDIC, or OCC. I'm sure Greg Kidd, being a former Fed and the former Chief Risk Officer at Ripple Labs, helped him in some capacity, at least giving him the awareness of how to navigate the complexities of securing various blessings from the regulators.
My name is Greg Kidd. I am the Chief Risk Officer of Ripple Labs, a technology company that builds payment tools for financial institutions. Previously, I worked on payment systems at the United States Federal Reserve and advised financial institutions on risk and governance. Ripple Labs is based in San Francisco and employs a team of men and women with experience in government and regulation, finance and technology. Their previous experience includes Federal Reserve, U.S. Securities and Exchange Commission, the NSA, Goldman Sachs, Deloitte, Apple, and Google. Most of the engineers here are sort of ex-Bitcoiners. It just is that they extended the protocol to include all currencies rather than just simply the Bitcoin. And it also allows the use of market makers, people that are willing to trade from one currency to another to actually operate within the protocol. Our goal is to create faster, safer, and more efficient payment systems domestically and across international borders. Ripple Labs aims to improve payments by offering modern, interoperable payment infrastructure for registered financial institutions, clearing houses, and central banks. As Ripple is payment technology for financial institutions, consumers may never know their transactions are being sent through Ripple, just as they have little to no knowledge of the ACH and wire rails that facilitate their payments today.
Switching gears to another powerful man behind the curtain is BlackRock CEO Larry Fink, who says every stock, every bond, every fund, and every asset can be tokenized.
I wrote about this in my last year letter, and this coming letter that's coming out will be a part of it. I'm frightened of our deficits. Our interest payments are now larger than what we were paying for defense. In the year 2000, the U.S. deficits were $8 trillion. That's after 230 odd years as a nation. And in the last 24 years, our deficit went from 8 to 36. And we can't continue at this pace. And the only way we can navigate this, we must grow the economy. We have to encourage more and more private capital. And this is why if we can reduce the timing of permits, reducing regulatory burdens, we could have a real opportunity. There's huge pools of long-term capital that is looking to invest, whether it's in data centers or ports or other things like that pension funds, sovereign wealth funds, insurance companies would love to be investing side by side. Let's work with the private sector. Let's try to find private capital together, working together to build out our infrastructure and to get our economy to grow 3+% over the next 10 years. If we could pull that off, our deficits are going to be a smaller percent of GDP.
Larry is giving us a peek into the future of the world of finance. Everything will soon be on chain, cementing BlackRock's financial role for the next century. Mr. Larry Fink just published his 2025 chairman's letter to investors. The letter was packed with deep insights related to the company, but what caught my eye was Larry's comment about tokenization being democratization. Today's financial system still runs on old infrastructure. Think of it like using a fax machine in the age of smartphones. The SWIFT system, which banks use to send money across borders, is slow and involves many middlemen checking details, much like mailing a letter instead of sending an email. Tokenization changes that by turning real-world assets like stocks, bonds, or real estate into digital tokens on blockchain. These tokens act like digital proofs of ownership that can be traded instantly without paperwork, middlemen, or delays. If everything from stocks to real estate were tokenized, markets could operate 24/7, transactions would clear in seconds instead of days, and money tied up in slow settlements could be reinvested immediately, helping the economy grow even faster. Who else do we know that's democratizing access to the world of investment? That's right, Link2. Link2 is creating a new pathway for investors like myself to participate in red-hot private market investment opportunities. Link2 gave me the chance to invest in Circle, Ripple, and Kraken, so my bags are packed ahead of the next FinTech IPO wave we're about to experience. Kudos to those of you who paddled out in the water next to me and have been patiently waiting in the lineup to take your turn and surf the greatest IPO wave the world has ever experienced. Now, before I let you go, I want to give you a friendly reminder for those of you who are new to my community. I'm not only a huge Link2 fan, but I'm an absolute Ripple fan. I mean, I'm wearing their colors right now. I'm a big believer that Ripple, the fintech giant, is leading the charge in modernizing our global financial system. On Ripple's website, you'll find their policy principles, which Ripple advocates for a clear and globally consistent regulatory framework for cryptocurrencies, ensuring both innovation and consumer protection. Their policy principles offer a blueprint that any country or financial entity can adopt to regulate digital assets effectively in our interconnected and global financial system. For instance, Ripple's policy principles include the following. Number 1, global consistency. Crypto assets should be classified into payment tokens, utility tokens, and security tokens, following the approach of leading jurisdictions like the UK, UAE, Japan, and Singapore. Number 2, risk-based regulations. Regulations should be technologically neutral, adaptable, and principles-based to prevent stifling innovation while maintaining financial stability. Number 3, innovation sandboxes. Governments should foster controlled environments where companies can test new crypto products under regulatory oversight. Number 4, publicly-private collaboration. Continuous dialogue between regulators and industry players will lead to clearer and more effective policies. And number 5, cross-border consistency. Crypto markets are global, requiring international cooperation and shared regulatory standards to ensure seamless operations across jurisdictions. Ripple's vision is to create a regulatory framework, a standard that balances innovation with security, setting a global benchmark for digital asset regulation. Their principles ensure financial systems worldwide can integrate blockchain technology efficiently, unlocking new economic opportunities while maintaining stability. Like DAI mentioned on stage at XRP Las Vegas, we are the good guys and we're on the right side of history. So whether we experience a FinTech IPO or continue down a road of economic uncertainty, hold your ground and don't lose faith. Now, with that being said, I'm looking forward to stopping by Wharton's Demo and Innovation Day at the Penn Club of New York. Can't wait to tune in live to Chris Giancarlo's fireside chat with Ripple's Chief Legal Officer, Stuart Alderati. Maybe I'll be lucky enough to sneak in a few questions with the two living legends. Now, before I let you go, I'm going to leave you with a thought-provoking clip brought to us by the digital asset investor, aka the GOAT. In this clip, DAI plays a short presentation by G. Edward Griffin, the author behind The Creature of Jekyll Island. Mr. Griffin confirms that the richest families in the States had met up in Jekyll Island, Georgia, to strategize and execute a flawless takeover of Wall Street and the banking system. Fast forward to today, these same richest families are quietly deploying capital into the next era of finance. Is this their contingency plan or a hedge to maintain their family's wealth? I'll leave that up to you to speculate, and in the meantime, I'll park my pennies next to their dollars.
There are no coincidences, and nothing is new under the sun, folks. And remember, there are about 3 to 5 families in the world that control all the money, okay? Well, today I'm going to talk about one of them, and that is the Rockefellers. This is the huge, major wealthy family that I believe the money was made in oil, okay? How many times has oil come up around the talk about Ripple and XRP? A lot. Because remember, one of the core principles of all the wealthy families is, 1, to keep the money in the family, and 2, to stay wealthy and get wealthier. There's a reason the rich get richer, because they see things, or they try to see things before anyone else. XRP is one of those things, period. Here we go. The Federal Reserve was created by the most powerful families in the world. They all hopped on a train and went to Jekyll Island, Georgia, where I happen to be in Georgia. They rode up with all these powerful people and people that represented these powerful people. They wrote up the plan to create the Federal Reserve. Then they went back to Congress and they created the Federal Reserve and made it look like it was something that Congress had a part in and all of that. But it was created behind the scenes for a reason. This is G. Edward Griffin, who wrote the book, The Creature from Jekyll Island. Listen for about a minute and a half here, and he talks about how the Rockefellers were represented in that meeting.
And so now, many years later, it's possible for us to go to the public record and find in print detailed descriptions of what happened at that meeting. Well, who were these men? The first one I've already mentioned, the one with the railroad car, Senator Nelson Aldrich, who was the Republican whip in the Senate. He was also chairman of the National Monetary Commission, which was that special committee of Congress which was created for the purpose of proposing legislation which was to reform banking. Banking needed reform. And the American people were greatly concerned in those days over things that were going on in the banking industry. People were losing their money in the banks because they weren't keeping their promises to hold their deposits in reserve. There were runs on the bank and the banks couldn't pay the people back. But most of all, they were concerned over the concentration of financial power that was in the hands of a small group of very powerful and large banks in New York on Wall Street. This is what they called the money trust. And quite a few politicians were elected to office on their campaign promise to break the grip of the money trust. President Wilson was one of those politicians, by the way. That was the purpose of the National Monetary Commission, which was to propose legislation which eventually became the Federal Reserve Act to break the grip of the money trust over the financial markets of America. Aldrich was a business associate of JPMorgan. He was the father-in-law to John D. Rockefeller, Jr., which means, of course, that eventually he became the grandfather of Nelson Rockefeller, our former vice president.
So the Rockefellers were involved in the creation of the Federal Reserve. That's just a fact, Jack.
Feel free to leave your questions in the comment section below, and I'll do my best to get back to you ASAP. Thanks for tuning in. Love you mucho.